Welcome to the next video in the Nephew Elite series where I teach my nephew to trade. In this video we'll talk about support and resistance. So are you ready to jump in?
Yes, sir.
Okay, so in this video, I could draw all these pretty little charts or these pretty images. But what we're gonna do is I'm gonna use other sites, and we're gonna cite the sites. So you'll find links down below because they provide the graphical images that explain this concept. This is an important concept that you need to understand in trading. It's one of the basic concepts. You're going to learn advanced concepts around support and resistance, but in this video we're going to cover just the basics. And I will share some of the philosophy of how I think you should think about it that is maybe differing from the way it's taught in a standard manner. So support and resistance also is known as S and R. You'll see that abbreviated. And there's one reason why I don't like support and resistance. And I'll share with this first. So here's the way it works. Resistance, you can see this red line here on this chart. If I zoom in a little bit. So the standard way to look at it is that resistance is, you'll find two areas of the chart. Now these aren't candlestick charts, but the concept remains the same. The market came up, it sold off, and then it tried to come up again and it sold off again. Mm-hmm. That would be termed resistance, or that would be termed a resistance. Okay. Does that make sense based on what you see?
Yeah.
The other aspect of this is that there's support. And support is where price comes down, it hits a level, and then this is the first support, and then it comes up, it sells off again, and hits another level, or it hits that support, and then price is supported and it continues to go up.
So could that be like an indicator?
There are indicators that create support and resistance. The challenge is, one of the discussions is, how do you properly define support and resistance? Do you use lows? Do you use the closes or opens? So, and what time frame? I mean, you've already learned that every chart, the patterns, and so for instance, in every chart you're going to see support and resistance patterns. Okay. It's the same. The reason why, and I'll just share this at a high level, I don't like just the term support and resistance, although I do use it, is that and I know this is such a minute point, so most people are going to say, dude, just get over it. Support and resistance naturally frames your mind to think that the market always goes up. Mm-hmm. At least on a basic level, meaning that support means that support usually is only talked about from the perspective of price coming down and finding support. And then resistance is usually only talked about as price going up and then failing. Okay. So any thinking that I let enter my mind that has a bias around the market always goes up. The way to look at it, though, one thing you do need to understand is that naturally, if you look at charts over a long enough period, they just naturally go up. Mm-hmm. Because most people, and there's probably reasons for this, but one of the reasons is that if you look at the people that participate in the market, most people don't think about selling the market. Or there's a higher percentage of people that only think about buying low and selling high. Okay. Most people, if you're just someone that's looking to buy stocks, you probably have no idea how to short a stock. So you're only considering buying a stock when you think maybe Boeing is at a low, and you're thinking about you're going to sell it maybe 10 years in the future when it's a high, or you're going to hold it forever. So naturally in the markets, most markets, the long side has more precedence because the participants in it naturally just, most people don't realize that everything could go to zero. And actually, oil went below zero during the thing we can't mention here. And it was a rare event.
That's crazy.
But so it was interesting. And if you're really into futures, it was one of the most interesting times to be trading futures. But most stocks, they can't go below zero. Okay. Now, if you're trading with margin or you're trading with like borrowed capital, you could lose money even if it goes to zero. You could lose more than you have in the market, but that's a separate topic. What I really want to highlight here with support and resistance, or why I'm bringing this up, is that most markets, they're already biased long because if even it's 60% of the people, if it's more than 50% that are thinking that they always buy, then it's just natural that the market's going to naturally go up.
Mm-hmm.
And most people, when they think about investing in the stock market or anything else, they never think about losing money. They're always optimistic.
Yeah.
So, but we're traders. We don't care if it goes up or down. We literally don't care because we want to make money on both sides of the market.
Mm.
Now, you might find that you only want to trade long. I mean, you only want to make money when it goes up. Fine. I think you're missing half the trades. Fine. You might find that you only want to trade when it goes down. I know traders that what they do is they trade. They simply are short sellers. All they do. Short sellers get a lot of bad rap in the world, but all they do is they just look for stocks they can short, and they're really good at it.
Mm-hmm.
They don't care. So, like I've shared before, there's hundreds or millions of ways to trade the market. So this is support and resistance. You need to understand this concept because it is important, and you see it time and time again in the market. The way you'll learn that I think you should look at it is that this isn't resistance, this isn't support. Both of these are failures. This is a failure for price to go higher, and this is a failure for price to go lower.
Okay.
But you should understand the concept of support and resistance. Now I'll introduce you to the next concept of support and resistance, which is, so on this picture here, and by the way, we're on fidelity.com, so this will be linked below and wherever you're watching this. So one of the concepts that you'll learn, or you should know about support and resistance, is that, see how it has a prior resistance line?
Mm-hmm.
And then price breaks through that and then comes back and tests it?
Yeah.
So the concept is that prior resistance becomes support.
Okay.
And then it's support for price to continue back up.
Mm-hmm.
It can be reversed as well, or it should be reversed, which is prior support becomes resistance when it's selling off.
Okay.
So see this one where this is prior support where price went up, and then when it sold through that, and then it came back and retested that level, and then it sold off, well that prior support became resistance. These are great concepts. One thing that I would, these are obviously textbook examples.
Mm-hmm.
Support and resistance isn't an exact line or a price number. I mean, sometimes you see it and it's just perfect on a chart. These are zones. So
Okay.
you should look at support and resistance as zones. Like this whole area, this support zone. Let's go back to the support. So this whole area here is a zone. And notice how it goes a little bit below.
Mm-hmm.
You wouldn't say that support was broken because it's a zone.
Mm-hmm. That's just a little overshoot.
Yeah, it's an overshoot. So it's not exact. I mean, sometimes on a chart or multiple, sometimes you just see support and resistance hold up perfectly and you're like, wow, that's amazing. But that's very rare. Usually it's a zone because the market is chaotic. The market's uncertain. You usually get very clear, exact signals. So those are the two main concepts about support and resistance, which is, you have resistance up above, and it can be reversed, obviously. If it's going down, then it would be resistance from prior support would be resistance.
Mm-hmm.
But this is the general concept. And we'll jump into one other concept around, or a couple more concepts around support and resistance, and then we'll do a recap. So now we're on a site called Baby Pips. This is a Forex site, I believe. And I just want to show their image here. This is once again linked down below. When you get into support and resistance, sometimes you're going to define strong support. So see how this area here is strong support. Whoa, where do we go? Strong support.
Yeah.
And then this is minor resistance. And then this is minor resistance. This is minor support. Like you'll learn within the trade system how, well, here's what you're going to learn in the Rex Dog trade system. I'll share this instead of waiting until the end. So we use support and resistance because it's a concept that you see occur in the market. It's a pattern.
Mm-hmm.
But you don't have enough of an edge if you just use support and resistance because it's not, I haven't found it to be just support and resistance alone to be a big enough edge. So we interpret support and resistance through our bias and through momentum. And then we also have additional rules that we follow where we look for patterns. But then we have even what I would say I would consider advanced support and resistance. That's what you'll be trading within the Rexdog trade system. Now the next example comes from Investopedia, link down below. This is a concept of support and resistance, what is called a trend line. And see that line here that goes with what is called a trend? We're going to do a video on trends because I don't use trend, I use momentum.
Mm-hmm.
But for this case, I'll allow the word trend. A trend is basically the market moves in one direction. And see how that's a line?
Yeah.
That would be a trend line, and then that would be a support and resistance trend line, or it would be a support trend line, where basically the market is following a trend line that you can draw. And one of the cool things sometimes that works with trend lines is that the market really does this. Is it like you could draw this trend line at this point here, and then it will come back and retest it and hold that trend line. That's pretty powerful.
Yeah.
Once again, these trend lines, this is a perfect example. Trend line is a range. Trend lines, I used to really draw what are called value channels, and the challenge with, I think, a lot of people that follow me is that I see these things in the chart because I've been trading so long.
Mm-hmm.
I naturally see a trend line and see where another trader would see maybe a trend line on like a 5-minute chart,
Mm-hmm.
or where traders would see a trend line. So I see the trend lines just inherently in looking at a chart. So I know if it comes down here, I know, okay, well, that potentially other traders would be seeing a trend line test. I don't draw it on the chart. I used to. But you'll learn that. We'll cover trend lines because it's an important concept to know. So that's another concept of support and resistance, is that there's a trend line, and it works on the same way down. Like you could draw a reverse trend line. You could also draw a trend line on the top here, and then you would see maybe it would find resistance at the top trend line.
Okay.
So, like I said, these are just high-level concepts. Now, we go down to the next on here is another trend line. We covered indicators, and we covered simple moving averages.
Mm-hmm.
So this example here on Investopedia has another example where it's using the simple moving average of 15. And notice how it says, or it's showing that the trend line or the trend or support is found at the moving average.
Okay. Yeah.
So it comes back, it tests the moving average. Remember, this is a zone. It's not exactly there. It's a zone. But it's really holding the moving average in support.
Yeah.
You've already learned about the RDA.
Mm-hmm.
The RDA is a prime example of this. You've seen multiple times, and you've done this yourself, right? You've gone into charts.
Yeah, and then test or seen where it would come to react to it, and then retest it, and it bounces up, or go long, and then come back down and retest it, either break through and go short, or come back up and then test it again, and there's resistance, and it goes back down and goes short.
Yeah, so you've seen this behavior with the RDA.
Mm-hmm.
So this is another aspect of support and resistance. So you can see on the way up, they call it support. And you could you could say that. You could say, look, price was supported at the MA 25.
Okay.
Or I call it a test because that's what it's doing, is testing. Here, this is resistance because it found resistance at the MA 15. You can get a little dangerous in that thinking because then you have these magical lines that you think have magic on the chart.
And will never cross it.
Yeah. So that's one way to think about it. But once again, we're always going back. We have conviction, but we're paranoid.
Yeah.
So, but you're learning the general concepts. So that's I'll pause here and see if there's one more concept that we need to cover in support and resistance before we move on to the recap. So now we're going to cover what's called Fibonacci. We're still on Investopedia. So here they're covering what's called Fibonacci retracement. And you can do the research yourself. I went through a rabbit hole of seeing whether or not Fibonacci, for me, worked as a trading logic. I I think I found other levels that actually matter or that have higher probability than the Fibonacci does. But here's the general concept of the Fibonacci. This could be an hour video into itself, just so you know. It's based on the Fibonacci sequence, and the numbers that you're seeing here are the important numbers of that sequence. So what they do is generally they use a tool. Now we use the Fibonacci tool, but we just use 25%, 50, and 75%.
For
We
the
don't.
alpha candles.
Yeah.
For the packs.
Yeah, exactly. So, and other things that we use in the system. So here, though, they put high precedence in the 61.8% level, in the 50%, 38.2, and 23.6. Now, what they're looking for is reactions and support. So,
Between those.
yeah, so when they draw this, they would draw it from this low to the high. And then as price came down, or as price was moving, they would be looking for support or resistance at these various lines.
So those are the reaction zones?
Yeah,
Reaction areas?
but most people don't think of the market in reactions. Most people don't believe that you can predict the market. Most people are told that you shouldn't think about predicting the market, but that's what our system is based on. If you look at this, what you're doing, let's say you're down here and this price action hasn't happened where it came up from 0% to 50%.
Mm-hmm.
Well, what you're doing, if you trade here, you would be predicting that maybe it's going to come up to 23.6. Maybe it would come up to 38.2.
And then react there.
Yeah, and then react there. Or maybe it would come up to 50% and react there.
Mm-hmm.
So you're using a predictive model, but
Just not calling it predictive.
yeah, and like I said, I see all the time on Twitter, you can't predict the market. No one can predict the market. No one knows where the market's going, which is true. No one does.
Mm-hmm.
But if you're not predicting the market and projecting, what the heck are you doing?
Mm-hmm.
Like, how are you trading with conviction? So I've never understood that mantra because it just doesn't make logical sense to me. So this is another concept around support and resistance, which is what they do is sometimes they draw from the highs and the lows, or they'll take a range, and then they use what's called the Fibonacci sequence. You can look into it and see if it's a sequence that you believe in. There's some traders that all they do is they trade Fibonacci.
I'll still probably check it out and just look at it.
Yeah,
I might as well.
I know you will anyways. So because you're like me, you want to know about it just because I mentioned it.
Mm.
So
Yeah.
or you're going to come across it outside of your own research.
Yeah.
So that covers support and resistance. There, if I miss something, we will maybe do an additional video. So are you ready to recap and just share the high points that we covered in this video?
Yeah. All right, so just looking at my notes here, support and resistance levels are important times in the forces of supply and demand, as well as most markets are going to be biased long, just like you were saying, because most people are just going to look at the stock and put money in there and let it rise up, and they're not going to really try to short it or anything. As well as if prior support breaks through the resistance, it will now become that resistance.
Or, well, no. So let's take it from resistance. So let's say price breaks through resistance. So remember, resistance is a high, and then price breaks through that, and then it comes test that.
Mm.
What does it become then? What does that resistance become?
Support.
Yeah, maybe you said that and I didn't hear it right, but
Yeah, I might. Prior support becomes resistance. Prior resistance becomes support.
yeah,
If it breaks through.
yes, yeah.
Okay. Support and resistance is a pattern, but we also like to combine it with bias, momentum, patterns, and rules.
Mm-hmm.
And then as well as I'm gonna do more research on the Fibonacci and probably some more indicators in this.
I would say with the Fibonacci, you might want to start with the Da Vinci Code.
Oh, okay.
So there's a book on it, and then by Dan Brown, and then there's a movie.
Oh yeah, I might have watched that one.
Yeah, so I think the Fibonacci sequence in there, but I'm just joking. I mean, there's a lot of traders that use it, so do research on it. Yeah, that's good. I think that's the foundation of support and resistance. Of course, we'll be covering it a lot more detail, and you'll see it in action as we jump into charts and as you start to trade.
All right, sweet.
All right, take us out.
Yacht.